All right, let's get into it. Today, we're going to crack open a deep technical analysis report on NVIDIA, one of the hottest stocks on the planet. Our goal here is pretty simple. We're going to translate all the complex charts and jargon into something that actually makes sense. We're just going to follow the data step by step and see what it's really telling us about where this stock might be headed.
So this is the big question, right? Everyone knows NVIDIA has had this incredible monster run. But now everybody's asking, what's next? Is there more fuel in the tank for this rocket ship, or is it kind of running on fumes and about to pull over? We're going to treat this like a little financial detective story, using the clues from this report to piece together the answer.
So here's our game plan. First, we're going to get the lay of the land with the big picture. Then, we'll do a little detective work and follow the money's footprints. After that, we'll look at this tug of war happening with the price trend, and then we'll check under the hood to see if the momentum is fading. And finally, we'll put all those clues together to see what might be coming next.
Okay, first up, the big picture. You can think of this as the main dashboard for the stock. Before we dive into all the nitty-gritty details, we just need to see where things stand at a glance. Our first clue is its 52-week position, 80.86. Now, what does that actually mean? Well, in plain English, it means NVIDIA is trading in the top 20% of its price range for the entire year. So yeah, that confirms what we all feel. The stock is flying really, really high. Which, can get some people excited and make others a little nervous.
Next up, we've got the beta value, which is sitting at 0.87. All beta really does is measure how a stock moves compared to the overall market. A perfect 1 means it moves in lockstep. So being this close to 1 tells us that NVIDIA's ups and downs are pretty much in sync with the market as a whole. It's not exceptionally wild, but it's not exceptionally calm either.
And then there's the risk/reward ratio coming in at 2.11. Now, this is interesting. The report calls this average. That's a really important clue, because it suggests that even with a super high price, the market thinks the potential reward you could get is pretty much in line with the risk you're taking. It's not a screaming buy, but it's not a clear sell either, based on this one metric. Okay, so here's our first real puzzle piece. The stock is near its all-time high, right? But the report says the immediate trend is weak. That seems like a total contradiction. The price is up here, but the energy, the oomph pushing it higher, seems to be fading out. It looks like the stock is just moving sideways, almost like it's catching its breath. The big question is, why?
To figure out why it's taken a breather, we need to follow the money. By looking at the trading volume, we can get a sense of who's buying and who's selling. Are the big, long-term players doing the same thing as the fast-moving day traders? Well, the answer here is pretty fascinating.
And whoa, here's where the plot really thickens. We see a clear split. The on-balance volume, or OBV, which kind of tracks the flow of money over the long term, is super high. This suggests the big institutions, the smart money, are quietly buying this thing up and planning to hold on. But the accumulation/distribution oscillator, which measures short-term pressure, is negative. That tells us the day traders are hitting the sell button and taking their profits. It's a classic split decision.
This brings us perfectly to our third section, the trends tug of war. We've just seen a conflict between who's buying and who's selling. So now we're going to use moving averages to see how that fight is actually affecting the stock's price. Is that long-term strength winning out, or is the short-term pressure dragging it down?
And wow, this slide just illustrates that battle perfectly. On the left, you can see the current price is sitting comfortably above its 200-day average. That's a great sign that the fundamental long-term uptrend is totally intact. But, and this is a big but, look to the right. The price has recently dipped below its 5-day and 10-day averages, and that signals some pretty clear short-term weakness and downward pressure.
This quote from the report just sums it up perfectly. It's the core conflict of this whole analysis. The foundation is solid, but the road immediately ahead looks a little shaky. And that's the key idea to keep in your head as we move on to our next set of clues.
So, if the trend is in a tug of war, what about its power? In this section, we're looking at momentum. Think of it like popping the hood on a car. We want to know if the engine is accelerating smoothly or if it's starting to lose power and kind of sputter.
Before we look at the results, let's just quickly define a key tool here, the MACD. I know, it sounds super complex, moving average, convergence, divergence. But really, it's just a popular indicator that helps traders get a feel for the strength and momentum of a trend. It's one of the main gauges on our technical dashboard.
And man, that dashboard is lighting up with some warning signs. You don't have to be an expert on every single one of these things to see the pattern. From the MACD we just talked about to other tools like the CCI and Williams-R, they're all basically pointing to the same thing. The stock's upward thrust is losing steam. It really is like that engine is starting to sputter.
Okay, so we've gathered all our clues. We've got a stock near its high but with a weak trend, a major conflict between long-term buyers and short-term sellers, and fading momentum. Now it's time for the final act, putting it all together to map out the key price levels to watch and the potential scenarios for what could happen next.
So, the report points out 3 absolutely critical price levels. At the top, you've got resistance at 191.34. Think of that as a potential ceiling. In the middle, there's a pivot point at 185.13, which is like a central balancing point. And then at the bottom, we have support at 181.93. That's our potential floor. The stock's next moves are probably going to revolve around these 3 numbers.
And based on those levels, the report lays out 3 main ways this could go. You've got the bullish case. The price smashes through that 191.34 ceiling and just keeps climbing. Then there's the bearish case. Selling pressure takes over and the price falls towards that 185.13 pivot point. And finally, maybe the most likely scenario given all the conflicting signals we've seen, the stock just kind of chops around between that floor and ceiling, consolidating and digesting its gains.
And that brings us right to the report's main conclusion, which pretty much echoes everything we've uncovered. The big picture? Still positive. It's still in a long-term uptrend. But in the short term, all the signs are pointing towards a period of consolidation. You know, that sideways movement, as the stock just takes a break after its massive run-up.
So there you have it. Our little detective story reveals this really fascinating standoff. You have a long-term giant facing some very real short-term headwinds. The big money, the institutions, they seem to be holding firm. But the short-term traders, they're getting nervous and cashing out. The ultimate question isn't just about price levels anymore, it's about time. Will the patience of the long-term believers win out against the nerves of the short-term traders? That is the battle to watch.